exactly how I find high time frame bias, which allows me to find very high probability entries on a lower time frame. So let's go. So, so just to start, okay, for high time frame bias, you can always use daily, 4 hour, or 1 hour. But because I'm a scalper that um, when I trade, I only trade from 9:30 to 11 a.m. EST. So I normally look for my bias on the 4 hour, 1 hour time frame. And this trade was executed actually on the 6th of May. A bit of a recap for you guys as well. So just to start off, how I determine high time frame bias, we can see here that the price is actually trending at the moment. And how I determine high time frame bias is, for example, if it's bullish, price will actually create bullish fair value gaps on the high time frame, whether it's a 4 hour, 1 hour, or daily. And we can see on the 4 hour here, price created a gap here, right? That's one. There's two. And leading up towards the trade that I took on the 6th of May, a high probability chance that we can say that price is currently bullish, right? So we maintain our high time frame bias as bullish. So that's how we determine it. Okay, so on the 1 hour chart, if you guys want to get a little bit more surgical down from the 4 hour time frame, we can see as well the 4 hour FVGs have been annotated here. On the 1 hour time frame, there was a bearish fair value gap that got disrespected. This further adds to my conviction that the price is actually looking to go up. And also, during the European session, just before the market opened, at 9:30 equities New York open, it also created a 1 hour bullish fair value gap. So the arrow here signifies that the trend is towards the upside, bullish bias, and that's when I'll be saying that, okay, so high time frame bias is bullish. So for my lower time frame setup and entry, I'm only looking for longs. So if your high time frame bias is bearish, you only be looking for shorts, right? So we drill down to the 5 minute chart because I was monitoring. I normally monitor the market on the the 1, 2, 5, and 15 minute. So remember the 1 hour bullish fair value gap here. That's green. So I want you guys to remember that. On the 5 minute chart, this is the green one. So at market open, price went all the way down, right at 9:30, sweeping, any pending orders, stop losses underneath around 28,280. So, before price wants to show its intention of where it's going, it will move the opposing direction first, move the opposite direction first. So if it wants to go up, it will sweep the bottom. If it wants to go down, it will sweep the top. So in the 5 minute chart, there's also a few things that I want to point out. So first of all, there's a 5 minute bearish fair value gap and a lot of low resistance liquidity run here. And these lines here, 28,342, 28,379, 28,410, these are buy side liquidity that the market will look to target and raid. So we can see at 9:30 open, big sharp open. You can see that price traveled towards the upside. It did not initially break 28,410, but after chopping for a while for the rest of the session, it breached all these levels. Okay, so on the 5 minute chart, that is what I noticed. We can see low resistance liquidity run. We can see a couple of buy side liquidity. We can see the candle respecting the 1 hour bullish fair value gap, meaning that price is looking to move more towards the upside because it respected this 1 hour bullish fair value gap. That's on the 5 minute as well. Obviously, this candle played out in advance, but I'll show you guys also the 2 minute and 1 minute on how I took the trade. So on the 2 minute time frame, we can see that my execution was here at about 9:32. You can see as well, there's a very hidden 2 minute inverse fair value gap here. You can see there's a gap here, right? And we can see price displaced above, breaking through that 2 minute inverse fair value gap. And I actually closed my trade here at the 5 minute bearish fair value gap. I actually executed it on the 1 minute time frame. So on the 1 minute time frame, this is where I entered. So we can see on the 1 minute, price actually closed above the 2 minute inverse fair value gap, right? And I wasn't closing my trades at 28,342 or 28,379. I closed it at around 28,394. Why is that? because first of all, I was initially targeting all this buy side liquidity here, but um, my entry model and my trading rules tell me that as long as there is a risk to reward of 1-to-1, I'm happy to just take it at my take profit level for my full position, take my full position off, and I don't really care where price goes after that, because I'm just following my rules, and as long as I follow my rules, I give myself the best outcome and opportunity for my trades to play out. And my trades normally have a 65 to 70% win rate. So as long as I follow my rules and I, take the trades that I'm supposed to do, I'll just let my edge play out like that. So why did I take it off at the 5-minute bearish fair value gap? Because price moves from external liquidity to internal liquidity, or internal liquidity to external. It's how it moves. It moves from fair value gaps to fair value gaps, or fair value gaps to external liquidities, or external liquidity levels to fair value gaps. So that's how price moves. If you guys have any questions, just chuck it in the comment below. I'm happy to explain more. But yeah, back to the trade. I took it as soon as price displaced above and closed above the 2-minute inverse value gap. I took it here, place my stop loss underneath that 2-minute inverse fair value gap, and also underneath these 1-minute bullish fair value gaps to give price ample space and breathing room to move. So I opened up my trade at 9:32. I closed it at about 9:47. It's about a 15-minute, I think a 10 to 15-minute trade. And also because there was low resistance liquidity run, like I've mentioned before, so price potentially melted all the way through towards the upside. I'll bring you guys back to the chart, and you can see here. So that was 9:44 when I closed my 9:45, and then opened it at 9:33. So yeah, that's about 10 to 15 minutes. And you can see here all this low resistance liquidity run got ran through throughout the session, right? So you can see here. Basically, I trade only until 11 o'clock. If I held my trade, I could have have all that gains, but like I said, I'm just following my edge, I'm following my rules, so that's all good. And you can see it from pretty much 10 o'clock to all the way to the afternoon session of about 2:30. Price made its way up there. So this is called low resistance liquidity run, where it's jagged, where price creates a lot of liquidity here. So you see all this buy side liquidity, which will add to the conviction that if you want to take longs, price can potentially raid these levels where the stop loss are and pending orders are placed. So that's how markets move. So I hope this video is clear to you guys, and I hope it's useful. So two things again. This is my entry model and how I determine my higher time frame buys every single day. So watch my whole video again if you guys want to see how I make it so clear. Otherwise, I catch you guys at the next one. Thanks for watching.